Imagine, you rob a bank in GTA, you receive $1 million, and an hour later you have nothing left. You spent everything on cars, weapons, and real estate. Sounds familiar? And now the question, how is this different from the real economy? Today we will break down why the economy of Grand Theft Auto is not just a game mechanic, but a working model of the real economy with all its laws, crises, and even inflation. And the most interesting part is that the developers at Rockstar created this system so realistically that it repeats the mistakes of real governments and central banks. Fasten your seatbelt. We're going on a trip from Los Santos to Wall Street. Let's start with the basics. In GTA Online, billions of in-game dollars are poured into the game every day. Where do they come from? Rockstar simply creates them. Players complete missions and receive money out of thin air. This is called a mission, the creation of new money. Now the question, how is this different from the real world? It is not. Central banks do the same thing. The Federal Reserve System of the United States can create trillions of dollars with a single press of a button on a computer. This is not a joke. During the 2020 pandemic, the Federal Reserve printed about $3 trillion in a few months. But here is where the magic of economics begins. When there is more money and the same amount of goods, what happens? Correct, inflation. In GTA, this is seen perfectly. Do you remember the first versions of GTA Online in 2013? An apartment cost $200,000, a decent car, $100,000. Now in 2024 to 2025, a yacht costs $10 million, a bunker, $2 to $3 million, and some cars, $2 to $3 million. Prices have risen 10 to 20 times in 10 years. This is classic inflation. And the reason is the same as in the real world. Rockstar constantly adds new ways to earn money, new missions, new heists. Money flows into the economy faster than new goods appear. The result? Old players who saved millions in 2013 now feel poor. The same way your grandfather and grandmother, who in the 1970s considered $10,000 a fortune, now understand that with this money, you cannot even buy a used car. Now let's talk about the most painful thing, inequality. In GTA Online, there are two types of players, beginners and veterans. A beginner starts from zero and completes simple missions for $10,000 to $20,000. Meanwhile, a veteran with a full arsenal of businesses, a nightclub, a bunker, an agency, earns millions passively, even without playing. This is called capital generates capital. The more assets you have, the easier it is to earn. In the real world, it works the same way. Do you have $1 million? Put it into the S&P 500 index, receive an average of 10% per year. That is $100,000 a year without working. Do you not have $1 million? You have to work all year to earn the same $100,000. In GTA, a beginner has to grind for dozens of hours to buy the first business. A veteran buys new content on the day the update comes out. Because money is flowing like a river, the gap grows. Rockstar sees this and tries to fight it. How? They add easy ways to earn money for beginners, double rewards, bonus weeks, gift millions. This is the equivalent of social programs in the real economy. Unemployment benefits, stimulus checks. But does it work? In the short term, yes. Beginners get a quick start, but in the long term, no. Because these gifts add even more money into the system, which again leads to inflation. And wealthy players simply raise the bar higher. This is the classic trap of social economics. You help the poor, you increase inflation, the rich adapt faster, the gap grows again. Now about something few people talk about. There are deflationary traps in GTA. What does this mean? Imagine, you bought an office in GTA Online for $1 million in 2016. You thought it was an investment, but what happened? Rockstar released a new update where they added cooler offices with more features. Your old office is now useless to everyone. You cannot sell it, or you sell it at a huge loss. This is called asset obsolescence. The same thing happens in the real economy with real estate in depressed areas, with outdated technologies, with the stocks of companies that failed to adapt. Remember Nokia? In the 2000s, it was a giant of the mobile industry. Their shares cost hundreds of dollars. Then the iPhone appeared. Nokia did not adapt. Their shares fell by dozens of times. Those who bought shares at the peak lost fortunes. The same happens in GTA with cars. You buy a supercar for $2 million, and a month later a new one comes out that is 5% faster. Your car is now junk by the standards of the gaming community. But you spent real money, in the form of time or even donations. This teaches an important lesson of the real economy. Not all assets grow in value. Most depreciate. Cars, electronics, fashionable clothing, all of this loses value over time. Real assets are those that generate income or protect against inflation. Real estate in the right places, shares of growing companies, businesses. Now the funniest part, speculation. In GTA, there's an in-game stock market in the story mode of GTA 5 where you can trade the shares of companies, and you know what? Players created real financial bubbles. Here's how it worked. In one of Lester's missions, he tells you to destroy a competitor of a company so that its shares rise. Players quickly understood the pattern. Buy the shares of the victim before the attack at a low price. After the explosion, the price falls to zero, but then it recovers. Sell at the peak. Thousands of players began doing this at the same time. What happened? Prices began to move not according to the game's logic, but according to speculative demand. A bubble formed. The share price did not reflect the real value of the company, but only the expectations of players. Does it sound familiar? This is an absolutely exact copy of real financial bubbles. The dot-com bubble, 2000. Everyone was buying the shares of internet companies that made no profit. Why? Because everyone is buying, so there will be growth. The bubble burst. The NASDAQ index fell by 78%. Trillions of dollars evaporated. The cryptocurrency bubble, 2017, 2018. Bitcoin rose from $1,000 to $20,000 in a year, not because its usefulness increased 20 times, but because everyone was afraid to miss out on profit. The bubble burst. Bitcoin fell to $3,000. Meme stocks, 2021. Reddit traders pushed the shares of GameStop from $20 to $483 in weeks. Why? Pure speculative hype. Most people lost money when the bubble deflated. GTA teaches us the main rule of finance. When everyone is talking about easy money, it is already too late. A bubble inflates on euphoria and bursts in panic. Now let's talk about the dark side. In GTA, there's a whole shadow economy. Modders, cheaters, the sale of in-game currency for real money on the black market. Here's how it works. A cheater creates billions of in-game dollars out of thin air, sells them to other players for real money. 10 million in-game dollars for $5 real. The buyer gets money quickly. The seller earns. Rockstar loses revenue from official microtransactions. This is called a gray economy. In the real world, the size of the shadow economy is enormous. Drugs. The global market is $400 to $500 billion per year. Counterfeit goods, fake luxury brands, $500 billion. Tax evasion. According to estimates, governments lose $500 to $600 billion annually. In some countries, the shadow economy accounts for 30 to 40% of the official GDP. People work for cash, do not pay taxes, trade contraband. Rockstar fights cheaters the same way governments fight the shadow economy. They ban accounts, prison, take away illegally earned money, confiscation, tighten control, police and tax authorities. But does it work? Partially. Because where there is demand and the possibility of easy profit, there will always be people willing to take the risk. An interesting fact. Economists study game economies to understand how to fight the real shadow economy, because in games, you can experiment without real consequences. Now let's talk about the most insidious thing, the psychology of spending. Rockstar are geniuses at manipulating your desire to spend. Here is the mechanism. You robbed Cayo Perico and earned $1.5 million. You feel rich. You see a new car in the dealership, $1.8 million. Almost enough. One more heist, and it's mine. You grind for 3 more hours and buy the car. A feeling of victory. But a week later, a new update comes out. A new yacht, a new weapon, a new business. And you are back to zero. The cycle repeats. This is called hedonic adaptation, or the hedonic treadmill. You get pleasure from a purchase, but it quickly fades, and you need another purchase to reach the same level of pleasure. In real life, it works the same way. You receive your salary, you feel rich. You buy a new iPhone, and the thrill lasts a week. Then it becomes normal, and you want the next one. Statistics show that people with a salary of $100,000 per year feel just as financially pressured as people with a salary of $50,000. Why? Because expenses grow together with income. This is called lifestyle inflation. You will always feel short on money if you spend everything you earn. GTA teaches this harshly. Even if you have 100 million in the game, you will still feel poor when content worth 150 million comes out. The solution? In the game and in life, it is the same. Stop chasing every new shiny thing. Buy only what truly improves the gameplay or your life, not what gives you the illusion of status. Rockstar periodically changes the GTA economy drastically. Remember the Cayo Perico nerf in 2022? That heist was giving too much money too quickly. Rockstar reduced the rewards by 40 to 50%. What happened? An economic shock. Players who relied on that source of income suddenly became poor in relative terms. Many quit the game. The economy contracted. This is an analog of a recession in the real economy. When a central bank raises interest rates to cool inflation, loans become more expensive, people spend less, companies earn less, layoffs begin, GDP falls. The US Federal Reserve did this in 2022. In 2023, raising rates from 0% to 5.5%. The result? The bankruptcy of crypto exchanges, mass layoffs in tech companies, a decline in the real estate market. But here's the paradox. Rockstar, just like central banks, are forced to do this. Why? Because if you do not control inflation, the economy overheats and collapses even harder. Imagine if Rockstar had left Cayo Perico as it was. Within a year, all players would have $1 billion each. What would they do? Nothing. They would have nothing to buy and nothing to strive for. The game would lose its meaning. This is called demand deflation. When there is money, but there's nothing to spend it on or no reason to spend it. This is worse than inflation because the economy simply stops. Japan has been living with this problem since the 1990s. Low inflation, an aging population, people save money instead of spending it. The economy has been stagnating for 30 years. So what have we learned? 1. Inflation is inevitable when money grows faster than goods, in the game and in life. 2. Capital generates capital. The rich get richer faster, the gap widens. 3. Not all assets are valuable. Most lose value over time. 4. Bubbles burst. When everyone talks about easy money, it is already too late. 5. The shadow economy is indestructible. Where there is demand and profit, there will be risk takers. 6. Hedonic adaptation. You will always feel short of money if you do not control spending. 7. Crises are necessary to cool an overheated economy. Rockstar created not just a game, they created an economic simulator that reflects reality more accurately than many economics textbooks. Why? Because in GTA, you feel all the consequences of economic laws. You experience inflation, inequality, crises, the temptation of consumption. And here is the main lesson. The principles do not change. Whether it is Los Santos or New York, virtual dollars or real ones, the laws of economics work the same. So next time you rob a bank in GTA, think, am I making the same mistakes in real life? Am I chasing every new shiny thing? Am I investing in assets that generate income? Or am I just spending everything I earn? GTA is not about cars and weapons. It is about you and your relationship with money. And if you understood this, you are already one step ahead of most people.